Try to remember how you felt back there on April 6th, April 7th, April 8th, when all this was going on, all this volatility going on. How did you feel about your portfolio? And if you didn't like the way you felt, it just means you have too much risk. So don't be too greedy here. Let's talk a little bit about what you need to know before the bell. We did wrap up the month of May very strong. We had this very strong rally. And we talked about as we headed into the end of the month that markets were getting very overbought on a momentum and relative strength basis. Don't be surprised if markets just kind of chopped around a bit. That's what kind of all happened last week. We really didn't have, and really in the last 2 weeks, really haven't gone anywhere. We came down, tested the 200-day moving average, bounced off of that. That's good news. The 20 days now crossed above the 200-day, the 50-day starting to curl up. So again, if market's going to hold here for another month or so, we're going to cross the 50 back above the 200-day. You get the golden cross. That's bullish for stocks. But again, right now we're just kind of working within, looking at a Fibonacci retracement sequence. We came down and tested that first level of that retracement right there at the 200-day moving average. That held, so that's bullish for stocks right now. We are on a MACD momentum sell signal, so again, that may continue to put some pressure. Markets are expected to open a little bit lower this morning, but not a lot. But again, I would kind of expect some more chopping around here. We kind of bounce off this 20-day, 200-day moving average convergence. That's a good bit of support right there. So again, just kind of a little bit more chop. As we talked about, previously, take a little bit of profits, rebalance. You've had this very, very strong run from this, this kind of that sell-off that we had going into Liberation Day. We've gotten almost all of that back. Markets are mildly positive for the year. So again, just, if that sell-off, as we've kind of reiterated before, that, you were like panicking at the low, try to remember how you felt back there on April 6th, April 7th, April 8th, when all this was going on, all this volatility going on. How did you feel about your portfolio? And if you didn't like the way you felt, it just means you have too much risk. So don't be too greedy here. In fact, we're going to talk about today, about buying stocks. And then next week, we'll talk some more about emotions as they go into this, because again, we tend to do the opposite of what we should, because we forget that when markets are down here, we have that kind of built-in instinct to flee. And then when markets have rallied back, our greed fear comes in and we're like, wow, but we don't want to miss out. It's like fear of missing out. Don't want to miss out. Try to remember how you felt back over here and then rebalance some risk in your portfolio. Again, doesn't mean sell everything, but again, think about how much volatility, you can withstand in your portfolio. Because again, this is one of the things that we see a lot with clients. It's like, oh, I'm very aggressive. And then as soon as there's the first bump in the market, they're like freaking out and want to sell everything in their portfolio. So just, kind of remember that. A couple of quick other areas to go through real quick. Gold has had a decent corrective cycle here, worked off a lot of that momentum, coming off support as well, holding the 20-day moving average, getting very close to triggering a buy signal here. So we may see a move up here in gold temporarily. That would probably put some pressure on the dollar. And the dollar's been, kind of working a consolidation pattern as well, holding a lot of support here on a sell signal right now, but getting pretty oversold. So again, we may see a little bit of weakness in the dollar, see a little bump in gold, and then that may reverse fairly quickly if we can flip this back onto a buy signal for the dollar. Start to see some dollar strength. And in fact, Morgan Stanley out this morning talking about something we've been saying for a while. They're kind of playing catch up with us, is that whole European strength thing, when this dollar flips over and starts getting stronger again, that's going to reverse back into U.S. equity. So underweight foreign stocks start to overweight Mag 7 in particular as we go into earnings season, but overweight U.S. versus Europe. That's their view. That's our view as well. That's what you need to know before the bell this morning.